if you're taking a 50-50 chance, it's a betting.
You can only react to a crash. You cannot really predict it.
25 दिन में पैसा डबल कभी भी पोर्टफोलियो से नहीं हो सकता.
Hello everyone and welcome to another session of Beyond the Charts, a show where we get really candid with all our portfolio managers. I am Abel Matthew, and to join us today, we have some of the star portfolio managers with us today and who are themselves rock stars within their own domain. So to give an introduction, first we have Mr. Arvind Kothari from Nivishai. Arvind, how are you?
Hello, how are you, Abel?
I'm good. Thanks for coming in, Arvind. And moving on, we have Mr. Amit Kumar Gupta from Adroit Financial. Hi, Amit.
I'm good. Thanks, Abel. Hope you're well.
And last but never the least, we have Mr. Abhishek Jaden from Windmill Capital.
Hi, Bill. Good to connect, and also to all the viewers.
We have a really big challenge for you guys today. We'll be asking the most frequent questions that are being asked by new entrants into investing. None of these questions are personally from me because I'm very good at investing. So if you see any stupid questions in here, it's not from me. Wink, wink. But hope we can get going. So shall we start off with the first question?
Yeah.
Yes, sure.
All right. So this is going to be very easy. Do I need to be good at math to invest in the stock market?
I have seen this for some people when they don't do it properly. So I have an example of an investor where he didn't use his math skill properly, and that helped him a lot actually, because we told him that one stock that he had bought was just 10% allocation in his portfolio, and it went up very high, and it became a 5-6 bagger, and it became 30% of his portfolio. So we told him to trim it down and bring it back to 10%, and mistakenly he just sold 10% of the stock. He didn't bring the allocation down. Luckily for him, that stock even went up 10x from there. I've never seen long-term investors doing a lot of math around. But yes, if you're trading for short term, or if you are into the markets, quick in and quick out, you need to be good at it, because if you're not good with your numbers, it can seriously hurt your portfolio. But yes, Buffett has always made this that if you think that you know 6th grade maths, that's okay for investing for long term.
I think it's basic elementary maths is more than enough for anyone to get a sense of the whole stock market. But for long-term investor, as I said, elementary maths works out to be very good. And I think just basic P&L and understanding the weights and allocation, these basic things are more than enough. Rest of the things are already taken care by the managers, like to shuffle your portfolio, to rebalance it. So yeah, that's on us. But you understand, like, just to correlate, a very good example is like, Earth revolves around the sun and all those things. And I don't need to go into gravitational equations to understand that, but I understand that what is happening.
And even there's a story where Einstein, who is like, the genius in math, gave up on markets because he couldn't understand what the psychology of the markets are, right?
I think Newton also gave up.
There's no correlation, I would say, for long-term returns of your math knowledge.
So moving on to the second question, that is, do I need to open a new bank account to invest in the stock market?
No, not really. You can use your existing bank account. Few people who like to keep investment account separate from the regular savings account, they would use basically the one account for investments and trading and another account for savings.
Yeah, this is a common question. And there is this confusion always from the point of view of also taxation, that people feel whether my other accounts would get mixed or things like that. It's nothing like that. Another question that people have, can I have multiple demat accounts? That is what some people get confused. Again, it's like your bank account, right? You can have 5 bank accounts, you can have 5 demat accounts in your own name also.
I think in this IPO craze, people think that having a multiple demat account means there is a more probability of getting a IPO alert. But I think not many people let that loophole was plugged in about 18 months ago. Now when they allocate any IPO, they just check whether you have a unique combination of PAN and a bank account and a demat account.
Why do we have only 2 stock exchanges? Why do we have only 2 of them?
We don't have to actually stock exchanges. People generally don't know this. But India, we have a lot more stock exchanges. Like we have a Calcutta stock exchange, we have a Madras stock exchange. But these 2 are the prominent ones. Okay, so it's like an IT industry. Okay, so in IT industry, there are like hundreds of companies listed on in the Indian market, right? But people know the big ones like TCS, Infosys, HCL, right? These are the prominent ones because they have a lot of liquidity there. A lot of market participants are there. So, but there are other stock exchanges also available.
Now, are there stocks that are listed exclusively in those stock exchanges? Let's say the Madras Stock Exchange. Is there a stock that is exclusively listed there?
Yes, there are some stocks which are exclusive to some of the exchanges. Like just to give an example, I think SpiceJet was listed on BSE till last year. Then there's some more stocks like Hawkins, Cooker and all which are listed on BSE, not on other stock exchanges. That's the Calcutta Stock Exchange. But the liquidity and volumes are very low.
People want to go to a marketplace where there are maximum amount of buyers and sellers, right? So over the years, what has happened is even we have two, right? BSE and NSE, but NSE almost 90% of the turnover getting done, right? If we can have exchanges which have different types of stocks or sectors, that would be more relevant going forward rather than, debating about why we cannot have same stocks on different exchanges, because it doesn't serve the purpose.
Is BSE a subset of NSE?
Many youngsters ask that, is NSE a subset of BSE or is BSE a subset of NSE? That a company decides. It is not that the exchange decides what companies I want to list. And older companies were on BSE. Then when NSE came, they also got themselves listed on NSE, but you have to pay a listing fees every year. Both are private entities, Bombay Stock Exchange and National Stock Exchange, both run independently and they have an index. The National Stock Exchange has Nifty as an index, Bombay Stock Exchange has Sensex as an index.
Regulatory clauses and the cost clauses, they are much more less in the BSE. So it's much more easier to get listed in the BSE.
Do stocks run out of stock?
For every transaction, there is a seller and there is a buyer. So the number of stocks on a particular day, at the end of a particular day, always remains the same. But the company usually keep amount fixed. So whenever they want to issue more number of stocks, then they'll do a bonus or a split to the exchange, which does not really change investment rationale of the stock.
When sellers are trying to sell or whether there are less number of sellers, when buyers are trying to more. So that time we see that in some of the stocks, the liquidity gets drier. And it can happen with a very big stock also, and it can happen with a very small cap company also. Like as he pointed out, if there is a very nice news about a company, so obviously the buyers will be more on the counter, so the liquidity gets drier. Generally, if a stock is liquid enough, you won't find any issues with buying a stock or selling a stock.
You're looking at, so it's based on, like, say, the robust bull run. When is the market going to crash?
So there's a famous saying by Charlie Munger that if someone tells me, where I'm going to die, I'll not go there. No one in the market can tell when the crash is coming. In fact, this has been one of the most hated bull run in the history that we've experienced, because when the crash is going to come, that is the time when most people would be bullish, right? Who before COVID was, very bearish on the market, or he said, a crash is going to come. Crash is an event which is caused by something which has not happened earlier in human history. So a good thing is to maybe try to predict that after a crash or an economic event, which would be the sectors or companies which are going to benefit or are going to come back faster than the other set of corporates.
You can only react to a crash. You cannot really predict it. Crash happened because there was so much of uncertainty. It was a once in a blue moon. Any of the known events will never cause the crash.
Why not buy a lot of shares of a cheap stock rather than buying one expensive stock?
So as my investment guru used to say, market does not hate or like any stock. It is agnostic in that sense. I would not buy a cheap stock just because it's cheap.
Some people have this, they will like, I have 1,000 rupees. Rather than buying a stock of a company whose price is 1,000, I'll buy 10 stock of a company whose price is 100 rupees, right? So they think like buy more of a less price stock. So I think that discussion comes from that angle also, if you see. So generally, it's not a common phenomenon, but generally the good companies like large cap companies have their prices like ranging from more than 500 rupees. A good example is Yes Bank falling 80% after 80% drop. People will keep on buying when it fall from 350 rupees to 300, 250, 200, 150. Yeah, it's standing I think at 12 rupees, 20 rupees currently.
I mean, Buffett called this cigar butt investing. So, this was quite popular till about 80s and 90s. But, in the modern context, when company can go directly to IBC, in bankruptcy court. So, I think this fascination about low price stocks based on what it can deliver in the future and not just because the price decline is up.
Like the show in Scam 1992, is there a bear gang that short stocks? Is that fictional or is that real?
I haven't seen this series, Scam 1992. But yeah, I think there are some people who likes to short a lot. I mean, there are a lot of hedge funds, not sure of in India, but across the world, which are based, they only short.
The scam movie, the time that it is based on, it was very common that few people could move the markets. In today's context, it has become very difficult that few people, as Abhishek very rightly pointed out, that there are institutions which can move the market, not people. So like a bear gang context, they can do it, but only on few stocks. And in Indian markets is still possible because we are still not having a lot of volumes in a lot of stocks.
People who are, let's say, from the older generation who are quite skeptical. So like the question is the stock market illegal, or is it something like betting?
If you're taking a 50-50 chance, it's a betting. If I have analyzed something and I'm confident on it, it's not like if I have 100 rupees, I go all in, right? That should also not happen, right? So I'm slowly building my wealth, and when the things are turning into my favor, I'm like more confident to my research and all. So that's not betting, right? That's how I analyze the markets and put the money.
When I was in my college and first year of my CA, and I told to most of them that I want to make a career in stock markets, I was discouraged like I'm doing something which is going to bring disgrace to the family, right? So that was the time, and now is the time is different. People never trusted this market, and always they treated it like a casino where people can just come and bet, and they never looked at it as an investment for the longer term. And that is changing. But yes, people still have a lot of concern, and people lose money because they don't do the due diligence. They lose money because they think that they can just make their money 10x or 5x or 2x in just a matter of days. And that is what this market is not about. This market is about long-term wealth creation. Platforms like Smallcase have helped that even further with retail investors, giving them a platform to get good advisors with their portfolios. And that's a brilliant thing for our overall economy and also for investors. I think.
What happens to my money or shares if the broker runs away?
Whatever shares investors hold obviously lies at the demat account, which is eventually with an SDL, CDSL, and both are government-owned entities. Nobody can do anything with your shares. There is a fund called Investor Protection Fund, which SEBI has made. In the worst case scenario, if your focus really goes bankrupt or is an illegal entity, then investors can reach out to that Investor Protection Fund to get a refund.
I don't think it is possible with the checks and balances that the SEBI has, made sure, because brokers are just intermediaries. Like your bank account, your demat account is a paneling account which no one can touch. The securities that are there inside cannot be touched without your permission. The money gets transferred to only the bank account which is paneling or linked to your demat account. It cannot go to anywhere else.
And now for the next section, we have a few DMs that our managers have received. And you have to react to these DMs in less than 10 seconds. And this is a rapid fire round. Go. 25 दिन में पैसा डबल कौन से स्मॉल केस से?
There's no such a small case. Take this question as a joke, but I have seen such kind of questions coming from a lot of family members and friends also. It's like betting, not to have expectations at all. So fair, like we would not have been sitting here and advising, making model portfolios for clients.
25 दिन में पैसा डबल कभी भी portfolio से नहीं हो सकता, right? It can be an individual investment. Sometimes you get lucky with some cryptocurrency, some stock can double. Across a portfolio, it can never double. So
the next question that we have is, can you transfer your portfolio to me for free? Abhishek can't comprehend.
Why will somebody DM me and ask? This is like, I can understand he's asking me to reflect my portfolio to him for free without paying me subscription fee, but asking me directly to entirely transfer my securities if he's not a relative, then it's a very random DM. I'm not even sure why I'm entertaining that guy.
What is smart beta? I don't have a son.
Beta is the father, I think, and smart beta is his son, which is smart in a lot of characteristics. And that's the whole concept of smart beta portfolios and the term which we keep on hearing in the market. Like it's a fancy marketing term, but all it means is like I'm taking a part of the index, molding it in a manner that I try to achieve more risk-adjusted returns on top of it.
I think we really need to give up this answer. I hope the person who DM'd this question is definitely watching this. I want to be executed on market opening or closing.
He wants to hang himself when the markets open or markets close.
He was invested in IFP.
I think he wants to execute his orders as soon as I think markets open. So the relevant answer can be an aftermarket order which you can place, which gets executed as when the market opens in the morning.
So thank you everyone. This is Abel Matthews signing off, and let us know what do you think in the comments below if stock markets should be illegal. And don't forget to subscribe to Smallcase to know more